I know, right? I'm not that hard to please. You tell me. How's it going, everybody? Welcome to our stock market update. My name is Dustin Tibbetts. I'm a financial advisor with Jazz Wealth Managers. We want to work with you. We want to be your financial advisor that manages your investments, helps you get started with your investments. We work with everyone. So while most financial advisors say, hey, you got to have some money to walk through our doors, we want to work with the beginner. You have some money already, that's cool too, but we want to work with you guys, take a group of you all the way to retirement. I'll give you everything I have, I promise, to make sure that you have everything that you need. So check us out at jazzwealth.com. Also, our portfolios on the portfolio page. But most importantly, you may have seen posts on Instagram, Twitter, Facebook, and now YouTube. We need a name for this show. Starting Monday, we're going to have a whole new name for this show. It's a stock market update, of course you know that. So we need a name that reflects the stock market update, a daily sort of update. If it can have something jazzy in there, that's cool too. And we're relying on you guys to come up with the name of the show. The winner, whoever posts the one that we decide to choose, we're going to choose over the weekend, will get, of course, our towel here that reminds you that the markets recover from 100% of every decline 100% of the time, something we've been sending out to our customers. We'll also send you this exact blue Jazz shirt, just like you see me wear in all the videos besides today's video. That was bad timing. We'll send you this coffee cup. It'll be actually a different one, a brand new one, and maybe a few business cards as well. So we will send that out to you, whoever we choose for the name of the show. And I'm not talking about, oh, we're just going to type the title on YouTube and that'll be the name of the show. I'm talking about custom intro with the name of it. We're going to have the graphics, the ticker above and below. Really stepping up our game. I've seen a few that I like already, so there's a couple I would say are probably in the front running, but take a shot, right? Post on there, doesn't cost you anything, take you a little bit of time. I like it to be creative, and of course, it could be a little fun, lighthearted, whatever you come up with. We'll see. We'll choose over the weekend. You'll find out Monday on our stock market update when the intro rolls who got to be the winner. And of course, we'll get that stuff out to you. But here, we're today talking about the stock market. That's what you really want to hear about today. So here's the deal. Stock market recovered almost all of the gains from yesterday. The NASDAQ hit all-time highs, so really impressive there. We'll go over to the charts. This is the Dow that you see on the screen there. Yesterday, of course, a bit of a decline. The Dow recovered all of that. This continues that breathing in and breathing out cycle that we talked about. So this is normal, right? There's a lot of news to cover as far as stock market news, financial news today, but this is part of the normal ebb and flow. It is earnings season, so I expect fully to see a lot of whipping back and forth as people respond to earnings. The bottom line is today, you got the Dow higher by 224 points, very nice. S&P was higher by 24, and the NASDAQ closed higher by 107. Here's a rule of thumb, by the way. Whatever the Dow is normally up, the S&P is typically a tenth of that. It's usually right in line. So if you look at the performance of the Dow is, say, 200 points, and the S&P isn't very close to up 20 points, if it's like only up 5 or only up 7, something's wrong there, right? And so that's always your first indication something didn't go right there. If the Dow is up 100 and the S&P is up 25, something went really well in the S&P, or somebody's struggling in the Dow. So a little lesson of the day for you, if you don't mind. So there's the Dow on the charts. The NASDAQ, of course, breaking the new highs. You can see it on the charts. By the way, if you're one of our customers, you want to understand these candlesticks a little bit more, we did a class for you. If you don't have it in your email, ask me to send you the link. I'll be happy to do that for you. Here's the NASDAQ, of course, strong move up to the highs. Again, the problem with this rally is that most of it comes from only a handful of names. 84% of the stock market's rally so far this year has come from 5 names, and I got to do it on this hand because there's only 4 on that hand, so I can't even say 4 names. It's 5 names. Facebook being one of them. Today it was up 2%. That was a major focus, and of course Amazon, there we go. Amazon hit new highs as well, $1,800. We'll go over that in a minute. There's an analyst that has a $2,000 price target on this stock. Of course, we'll cover that. The only name that didn't participate today in the FANG space was Netflix. It was down about 1.25%. Just a little tit for tat upgrade downgrade thing going on there on Wall Street. They'll sort it out. They'll get it done. I have no fear. Today, why was the market higher? What's the big deal? Yesterday, those tariff news on China, that's a big potential tariff, 10% on some of these goods. The problem is they were very specific about every tariff that they decided to focus on, or every product they decided to focus on. And so a couple things. Wall Street will say, financial media will say today, well, China didn't respond. They came back with nothing, so maybe they're going to work something out. Here's the deal. Those tariffs were so specific, China couldn't possibly figure it out overnight how they need to respond. They will respond, in my opinion, so let's see what happens there. The other part of it is those $200 billion in tariffs announced yesterday don't actually even take place until August, mid-August, so China's got some time to figure out how they want to play their hand. Maybe they'll use their currency. I don't know. How deep do you dig into this sort of stuff? If you want to get geeky, let's get geeky. Okay, tech stocks, of course, were your leading sector today. I'll use the XLK to kind of show you that on the chart. Actually, we can go over here and just look at the index individually. There you go. Information technology, your top performer. It did gain almost 2% on the day. Also a new all-time high. That kind of easy to figure out once you see that Amazon and Facebook did really, really well today. The sector's higher by about 6% just in the last 15 trading days. So if you go over here and you start going, when is this thing going to calm down a little bit? Look at the move from low to high, just over 6%. That's a pretty good push. You can measure that against the average move and find out that we've got a little bit more to go, but then that might be it for the short term. If you're a short-term trader, you know exactly what I'm talking about. If we go over to the next best performer, that's the industrials. Those names that got hit on the tariffs news. You had Boeing. That's the easy target. Boeing sold off yesterday. Today recovered all of it. Caterpillar sold off yesterday. Today recovered almost all of it. That helps, right? That helps those stocks move a little bit higher. On the downside, we had consumer staples. When everybody is excited about the stock market, nobody wants to play with consumer staples. That's almost like that's playing defense, right? You're saying, I'll go with the staples because I'm not sure about the rest of it. When everybody's excited about the rest of it, consumer staples don't really get any attention. I wouldn't freak out about a one-day move here in consumer staples. That thing has been trending higher in a way that doesn't it's not like the tech stocks. The consumer staples sector has been trending higher just like it's called sector rotation. So as the big fund managers, your mutual funds start allocating money towards that, it's a slow transition. Mutual funds, hedge funds, big institutions that manage pensions and everything, when they need to move some money, it's not like me and you where we just click a button and we've changed positions, right? When we update our performance or update our portfolios here at Jazz Wealth, we click a button and within a few seconds we've adjusted everything, no problem. Well, hopefully it comes a point where we can't do that because we're so large, but those big companies, think of a big ship and they want to turn the ship 20 degrees this way. It's going to take them a little bit of time. Well, you can spot that on the charts, and I think that's what you're seeing here in this consumer staples sector. We covered that a little bit. We'll continue to focus on it for you if that helps you. All right, let's go over to some stock-specific news. It's earnings season, so I could cover tons of different stocks. There's a lot going on, and that is only going to get worse. There's going to be so much going on. The bank stocks will be the focus going in through tomorrow, the rest of the week. But today, Delta. So you got Delta on the charts there, up about 2%. The company had better earnings than expected, better revenues than expected. And remember, Wall Street as a whole is expecting 20% revenue growth, 20% earnings growth compared to last year. So last quarter, we got 24%. That was a pretty good record. Not the best, but it was a record. This quarter, they're saying, okay, maybe not so much, but they're still expecting a lot. So the bar has been set really high. Delta helping to keep that bar high and keep everybody happy with those expectations because shares were higher on earnings news, kind of offsetting some of what American Airlines said. American Airlines was down, I believe, 10% yesterday because of what they said. However, you got to wait until the 27th or the 28th of July to get any results from American Airlines. So airline sector is definitely not done with its volatility. Let's talk about some fun stocks today. 11%. Papa John's was up 11% today. Did you see what Papa John said the other day? He said the N-word in a conference call like it was no big deal. He just kind of rattled it out thinking, nah, people won't mind this so much. People were pissed. Naturally, they should have been. So today he officially resigned as chairman because of this. Now, this is not the first time he's had problems, right? You go back in history a little bit, look what he said before. So he apologized for the comments. He said racism has no place in our society. But that's what everybody says once somebody gets mad at them and you have to take these kind of actions. So Papa John's Pizza was like, great, this is awesome. This might be just the refreshing change we need to get us off these lows. Because if you look at the stock over there, although it did recover all of yesterday, that thing is beaten down. All right, Amazon. There we go, load up there. Amazon, here's the thing. There's an analyst. Canaccord Genuity is the analyst company. Came out, the analyst that covers Amazon at that company came out, and he said our price target, instead of 1,800, which is where it hit today, almost, he said we're going to raise that price target to $2,000 a share. So my mind goes, oh, does that make them a $2 trillion company? Not quite. So if the stock does get to $2,000 a share, it still would not be the first company to get to the $1 trillion market cap. They'd be at about 971 billion. So they'd still have some work to go there. But basically, the analyst said that this was the most constructive of all the FANG stocks and had the best possible potential. And he said that current prices are actually very low compared to historical standards. We're looking at history on the charts here. I don't see a price where it's low. So, of course, he's not talking about the stock price. Much more detail going into that. Maybe that's something we could cover sometime. Oh man, there really is a lot of stocks I could go over. Let's do this here. You got CA Technologies. They're being bought out by Broadcom. So they're being bought out for about, I think it's 13.8 billion. Interestingly enough, if you go look at the shares of Broadcom stock today, they fell by just over $13.8 billion. I think it was closer to 16 billion, but who's really counting at this point, right? So why is that? Why does the purchaser of one company lose about as much value as they're spending to buy the other company? Well, it's because they decided to spend all cash to buy CA Technologies, or it's CA Incorporated now. So by Broadcom using their cash, that hurts their balance sheet by more than the value of the transaction. And so that's why you see Broadcom down, well, it's down 13.75% today, but that's about $16 billion. That's reflecting the purchase as well as the hit to the balance sheet in the short term. So a little geeky, maybe a little geeky. Sorry about that. Okay, you got CVS was in the news as well as Aetna. These two companies are trying to merge together. Aetna gained 2% on the day. CVS and Aetna have been trying to merge, and today the Department of Justice said, we won't block that merger. We have no issues. You guys can proceed and make that deal happen. So, of course, that was a huge sticking point, right? If the government says you can't merge with another company, you can't merge with another company. Take a look at what's happening after hours with AT&T. Just came out a few minutes ago. It's that sort of concept there. So not bad. Those were two good performers today. Walmart, if you happen to have a credit card processing business, unfortunately, you're not being considered for Walmart's business. They've been shopping around trying to find someone to handle all of their credit card business. Right now, they use Synchrony Bank to handle all their transactions. But they said, we really want to focus on our Walmart Pay. And they're getting beat up by analysts. Analysts are saying this is dead money. This is not a good stock to own. And Walmart, so they said, we have this vision for our Walmart Pay and how we want to operate our transactions going forward. And they announced that Capital One was one of the front runners. It is now down to either sticking with Synchrony, which would be that's a big deal if they decide to leave Synchrony, or are they going to go with Capital One? I think Capital One has the mobile side of things, which Walmart is interested in. I think they've got Synchrony beat on that one. Capital One really spent the last 6 months getting their ducks in a row. Probably a lot of sleepless nights by their programmers over there, but I gotta feel like Capital One's gonna get the deal. We should find out shortly. What else? Fed chairman came out today and said that the stock market, the economy is doing well and is in a good place. However, tariffs could change that. Leave it to the guy. He can't just say good things. He said good things and then he's like, but we don't know what the hell to do with this other tariff thing right now. That happens. So typically when a Fed chairman makes a comment, it is not all rosy. There's a nice balanced neutral speak. Nobody wants to spook anybody. Nobody wants to get anybody too excited. Over there. Thank you. Nobody wants to get anybody too excited. And so typically they do sort of that neutral speak going forward. So that's it. That was all that. He had a little speech today, and that's anytime the Fed chairman speaks, by the way, people listen. They're looking for the headline. It wasn't anything important. He just happened to say that. Weekly jobless claims fell to 214,000. We were expecting 226, which would have been an uptick. So that was a bit of an exciting surprise earlier in the morning. Certainly didn't hurt the markets at all. And finally, here's an interesting one. By the way, on Monday, all this stuff's going to be on a ticker, so you better just read it. So Congress is making the second step. So they've passed their committee. Now this bill is making the second step here. They're working on a bill that allows you, or will allow you, to write off gym memberships. Like, I read that and I'm like, all right, well, you save me a whole $10 a month. That's pretty cool. gym memberships, personal training, classes that you take, etc. Is that really what they're focused on? Like, that's what I got out of it. Really? You guys are so interested in that? You want to focus on gym memberships? Who cares if I can write off gym memberships? Like, and their answer to it was, well, we realized the tax reform just took away a lot of tax breaks, so here you go. Here's one back. Thanks, right? Like, what a joke that is. I can't believe how ridiculous that is. And the fact that that even made headlines is ridiculous. All right. Thanks for posting some things there. We do have someone reading that, so we can put that on a list. We're gonna all figure it out. We'll see what happens. There's some good ones there, by the way. Nice. Very, very nice. Buying based on value of the company and not the value of the stock, and do some classes on determining values. We could really do some geeky classes on that. Yep. That is interesting. And I could share a couple stories about me hanging out with this was like 4 years ago. I stumbled across, accidentally, a group of Goldman Sachs trainees, and they were all panicking about what they were, passing their tests and everything, and what Goldman was putting them through, and just starting to talk more and more about it. I think I ended up teaching them stuff. Like, we got into some geeky talk, and it was at a bar too, by the way, right over by the Hudson River. And I can only imagine what the bartender was thinking. I'll have to share that story with you guys sometime. Okay, as far as that goes, I think we've covered everything. We've covered everything. I'll be back tomorrow, of course, with our normal live class at 1 o'clock, and then our stock market update. In the meantime, shoot a name, leave a comment, go on any of our social media, or just post it on this video when we're done here. Let us know what we should call this thing. There are a few really good ones. You guys are really creative. I was hesitant to throw that out there, but seriously, we'll send you all that stuff. And of course, keep us in mind at Jazz Wealth. If you're not one of our customers, we have a lot to offer. We'll talk to you later. See you guys.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.